2nd February, Thursday. Alright guys, this is the MAO that everybody will want to watch because Michael Burry and Jim Cramer is fighting on, right? We are basically having an epic battle now. Michael Burry, obviously the bear side, and Jim Cramer, the bull side. Now the question is this, with the market retaliating last night, the question now is that, are the bears really wrong? Alright, this is going to be a big thing that we will talk about it later. Alright, but before that, once again, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Now let's recap what happened last night. The Dow Jones recovered and ended up with 6 points, okay? But the Nasdaq up by 261 points. So that's a lot. Now what's the main reason? Because chips maker basically went up, technology went up. Why? Because apparently Federal Reserve increased interest rate by 25 basis points. So I was wrong. Yep, I mean again. Because the thing is I expected Federal Reserve to take the tougher stand, to just go for 50 basis points and get it done over it. But now they're saying that what I said to 25 and potentially another 25, and then we look at it. So the market likes that, and the market recovered. In fact, Amazon is back above the $1 trillion mark once again. So you can see what happened now. The market was basically sideways, and it was after that, during the FOMC meeting, the stock actually came down. Now, once after Jerome Powell came back in and talked about what is going to be happening and stuff, incredible. The market just pulled all the way up itself. Ridiculous, crazy, absurd, but that is how the market works. And then the S&P now is trading at 4,100. It's 200 points away from what Mike Wilson said. So the thing is this, basically, all right, the investors on Wall Street thinks that, okay, Jerome Powell will most likely will reduce or ease off the aggressive tightening campaign. Okay, but the thing is that, right, he said that, right, the disinflationary process has begun. All right, we all know that yes, inflation has come off from the peak, but it's still at the high. I mean, my point is this, your cost is still there, but the market just seemingly prefer to listen or do what they want to see. So in fact, the central bank had gave no real hint of a pause in hikes. Later I'll talk about this. And in fact itself, right, okay, they actually mentioned that the Federal Reserve need to be restrictive for some time, and the central bank had more work to do. So, and they even say that there's no signs yet for the Fed to be open to 2023 rate cuts. Alright, so my point is that there's no such things, but the market just emphasized and kept on buying. Alright, so let's see what happened. Now, one of the things is that because Meta earnings was coming out, and apparently it was pretty good. So Meta now, the earnings have came out and it has soared. By the share price up by 20% on the fourth quarter revenue beat. But take note, it's revenue beat, it's not earnings really. So the thing is that the market now is really emphasizing on revenue. Come on guys, revenue is nothing, because if revenue is there but your earnings is reduced, there's no point. So now Meta shares up by this 20%, what a jump, up by $30 to $183 right now. Wow, that's a very major jump here itself. And I will just say upfront, guys, this is really incredible. Just a couple of months ago, we have this Meta coming down all the way, and I was pretty bearish on this. I said that, okay, at $89 there will be a first support, which really happened, and I suspected that by about 122 will be a good time to sell. But of course, I know this Meta got a lot of buyers, a lot of people who likes it, so I didn't give a sell call. I said recommended, and I said that the next level 137, which obviously has tripped over here, but now it broke the moving average, 150-day moving average, and now has traded. It's now here. Oh my god, that's pretty high. But to me, guys, this is a good time to take profit. Okay, book your profit. All right, don't stay there, because because I don't think that this will sustain. Honestly, I really don't think it will sustain at all. So you better take profit right now at 183, 184. Take your profit and go. Why is that so? Let me show it to you now. Next chart. Now this is actually AMD. Now AMD is doing chips. Okay, the thing is this. Last night, oh my god, look at AMD. The share price bunch shot up above the MA 150 and went all the way up to $84, which up about 12%. Okay, so we all know that Biden administration has been planning to have invested a lot of money into the chips maker industry, because they want to really battle with China. We understand that, but to buy regardless and irrationally is something that I'm pretty concerned, because you see, we all know that the news came out that AMD revenue beats target. Okay, so the market was actually pretty good. All right, say okay, beats revenue again, that's good. But if you actually study the accounting around this is really incredible. Now the revenue, yes, it has increased, and you can see right here. But do you notice that the gross profit, which is before cost, is actually down? Take a look, it's down. And then the thing is the gross margin percentage has dropped. And the operating expenses have increased by double, and that's why the operating income is in negative. My goodness, negative, down by 112%. Okay, guys, so the net income is only $21 million. Oh my goodness. Okay, guys, this is really down by 98% because fourth quarter last year was at $974 million. So do you think that this is actually make any sense here? It doesn't. In fact, the earning per share itself is only 1 cent. Oh my goodness. Right, it was 80 cents just 1 year ago. So tell me, guys, this is really not good. But if the market is actually just watching revenue as their main reason to bump up shares, then I tell you guys, we are in serious trouble. Okay, but again, it's going to be tough because if you tell people this right now, look at the bullishness of the S&P 500. This is really very powerful run. Okay, take a look. Now the S&P is really mounting up pretty strongly. You can see that it was very heavily supported at this point, which I realized that it was an MA 150, and it was the level that this Mike Wilson say 3,900. Okay. Now yesterday I already tell you guys, with the volume increasing like this, while the price is going up, that means that there are still buying interest there. It is very possible to see the S&P going up all the way to 41.96, which is not too far away, right? Okay, so other than just only the market is going up itself, right? Let's look at some real stuff here, which is the rationale. The thing is this, the bullish percentage index, all right, apparently is now at a pretty high level. Now think about this, just about 3-4 weeks ago, it was at a low level, and that was whereby on a contrarian note, you should know that it's time to buy while the market was coming off. So now the thing is this index right now is at 67, okay? That is pretty high, right? A lot of people are buying. That is why the bullishness is there. But of course, the next thing is this one here, the fear and greed index. Now, just a couple of days ago, I talked about this, and I mentioned to you guys it was about 672, 73. As of yesterday, from 70, it has bumped up to now 73, and is going very near to the extreme greed area. So think about this, guys. Everybody is buying. Everybody thinks this course is over. This is good. No need to fear. Then the question is this: why are the bears still shorting the market, right? Because it's all depends whether are you looking at it from fundamental or the technical point of view. So that's the reason why Jim Cramer kept saying that it's time to buy on dip, buy on dip, buy on dip. But Michael Burry say sell. Now yesterday, Michael Burry just gave a very simple statement. Okay, sell, full stop. Now, of course, the thing is this: sell what? Sell equity, okay, fine. That means the market's coming out. Sell bonds, that means that equity may be going up. Sell gold, sell car, who knows? So it's a very ambiguous sell, okay? Then, of course, straight away, it happened to be the same day whereby Jim Cramer was calling for buy. So you can see on the social media, everybody is doing all the Photoshop everywhere. Okay. The thing is this, let's just go back to something that Michael Burry shared on the 23rd of January. He actually showed a chart back in 2002 and 2003 whereby he shows that there's this potential of maybe. Now maybe means that it could, this is what he draw here. This is drawing done by him, and he also put the thing here itself. So it shows that, right, maybe he's telling people that, okay, we have this consolidation run right now, and after that, when the market loses this, the selling will come in. All right, now back then the market lost 30%. Okay, 30%, that's quite a lot. So is that what I'm trying to say? Okay, I don't know, because he really didn't say anything else. But the thing is that, right, a lot of articles are talking about this. It could be an ominous sign that the Michael Burry posted, okay, because that was what happened back in September 2021 to 2002 March. Okay, so the thing is this: we all know the market went up by 18% back then, and then after that the market shed 30%. Okay, so is that a sign? Is that a thing here? Well, think about this. I actually happened to talk about this, right? In one of my past video, I said that, right, we have now one of the worst economic signs since 1932, and I mentioned to you guys the S&P 500 might be pushed up. Remember, I showed this chart to you. I said that if the market breaks 4,100, it will be pushed up to potentially 4,200. That was what I mentioned yesterday, right? Remember that, because I said that the volume is actually increasing. All right, so if you remember that, that's good, because from then on, right, I tell you guys that could be a potential repeat of 2008 and 9. Why? Because this chart itself, right, is the chart that I draw. So it's very similar to Michael Burry, but do note I did not copy him. In fact, it's my own drawing. And I said that, right, once the market really loses the moving average, then what happened is that there'll be one last wave, and once the market breaks down, it will go into a spiral. Okay, so that is what I mentioned in my past MAO. And in fact, right, I show you the similarities between the 2008 chart versus the 2023 chart, which looks very identical. So to me is that, guys, you really have to consider the fact. But of course, this is pure technical, but what is a fundamental reason behind it? So we have to go back to what Michael Burry believed. All right, he basically says that now this is not to be fooled by the recent rebound. In fact, he's saying that, right, this is not going to sustain. This is likely the greatest speculative bubble of all time, and predicted the mother of all crashes, all right, is coming in, and he feels that, right, this is going to be a big one. In fact, he himself had already took his own advice by selling all his shares away except one. So the question is, even Jeremy Gutnam have also said that this S&P could plummet 50% in a worst case scenario, all right? And the thing is, this Mark Spitzneiser, okay, all right, diagnosed as the greatest tinderbox time bomb in financial history. Oh my goodness, okay. So let's just go back to what Jerome Powell said last night, and let's just be very objective here, okay? Now, Jerome Powell started his press conference by reaffirming the central bank's stance in to fight against inflation, okay? So that is good. And he says that the Federal Reserve remains strongly committed to bring down inflation, repeated the statement language about ongoing rate increases, and stressed the problem that inflation can cause for consumer and labor market. So without price stability, the economy does not work for anyone. Okay, this is good, all right? Then after that, he came in and added on, let's be our thing to cheat here. He says that despite the aggressive rate hike campaign, the central bank has more work to do. Oh, that is also good. That means that they understand that they have to probably look at the market closer and make the decision. So the thing is, he says that although inflation is easing in some area, but it's too early, okay, to say the battle has been won. In fact, it's premature. I like that, okay? So yes, this inflation has begun. We saw some places it's coming down, but it's not over yet. So again, this shows that Jerome Powell is most likely going to increase interest rate along the way, and that should be considered hawkish, right? All right. So the thing is that we all know that, you know, this is actually a very hawkish statement. But when Jerome Powell was speaking to the journalists, it's a different thing altogether. All right. In fact, he said that towards the end, he said, don't expect a rate cut in 2023. Okay, he really very clear. Given our outlook, I don't see us cutting rate this year, and if our outlook comes true. And the thing is that they already know. They know that. So why would the market be buying? That is the biggest question. So of course, rather than I tell you what I think, why don't we just get some expert right now and listen to them and see what they have to say? All right, there's a couple of them. Let's watch them right now. Okay, let's go.
Loosen up to the most in a year.
All right, Matt, yes, but the key focus will be on this statement in the opening statement. What is he going to do with this line, ongoing increases are needed in the target rate? Does that line stay there, or is it perhaps amended? Does it perhaps show some evolution that the Fed funds rate is now approaching the peak rate, or could it be dropped entirely? If it is dropped entirely, a lot of the market does expect some sort of pushback on those rate cuts that you mentioned. Perhaps he adds a line in here that gives some extended forward guidance that they plan to keep rates sufficiently restrictive. But for the hawkish and dovish hits, it's all going to be about his assessment of the moderation of inflation. For a hawkish hit, he's going to have to keep the hope that a May hike is still alive. He'd do this by almost dismissing the recent drop of inflation, saying he almost doesn't believe it because the unemployment rate hasn't ticked higher. The labor market is still strong, which means inflation is unlikely to fall back to 2%. And he could repeat that the Fed has a way to go. But if it's a dovish hit, he'd definitely have to leave the door open for the Fed to pause in March. He could do this by acknowledging that inflation, that the trend downwards is welcome, and that rates are already approaching sufficiently restrictive, and he declared that we are data dependent, not necessarily declaring victory on inflation yet, Matt, but that would open the door to the market to believe that a pause in March is on the cards.
So you can hear very clearly, right? Rates are approaching sufficiently restrictive area. Okay, that means that Jerome Powell has bring up all the rate to down to current level and can go to about 5%. But it doesn't mean that after hit 5%, they must cut rate immediately. It doesn't make sense, right? So it likely will stay at 5% for some time. And that will basically have the high cost on the earnings itself. And then people will feel the pain. All right, so that is what is the clear picture here. And of course, let's hear another guy who's talking about what he view on the market. And of course, based on his seniority, I think he knows what he says.
No great surprise for me. Everybody expected 25 basis points as the Fed is slowing down its tightening process. The big question is whether they're really done or not. If you look at the money supply, which is a very important variable that the Fed does not tend to look at, it's actually negative. So,
guys, you can see that at the moment right now, right, the Dow was down, the Nasdaq was down, everything was down, right? It was all down. In fact, it was all down at that point when Federal Reserve actually announced that they're going to increase rate by 0.25, which is 25 basis point. So that point. But the thing is this, it's clear, right? But the moment after Jerome Powell starts speaking, the stock market just go all the way up. So that is why I say that something's wrong over here.
Is another indicator, in addition to the inverted yield curve, that the economy is slowing down and that we will be facing a recession in the middle of this year.
So that is your base case, is that there will be some sort of recession by mid-year. Does that then argue that the stock market has got it wrong? The market has been rising here for the past 3 or 4 months generally, and it had put in a very nice month of January. Do you expect that to cease if, as you just said, the telltales of recession become more evident?
Well, Tyler, we all agree the markets tend to be forward-looking. And in a forward-looking market, they may have priced in that small recession already. Mm-hmm. I'm not the great stock market guru that a lot of the other guests are. But I would see the stock market improving as a very positive sign that the recession will be relatively mild and not of a long duration.
You can see that the market is really recovering already as what is going on right now. So he's saying that the thing is that maybe the market is very priced in a recession. I mean, my point is how can you price in a recession when you don't have a recession to begin with? Okay, I mean, oh gosh. Okay, anyway, so the one more video for you guys is Jeffrey Gunlock. He's actually the bond king. All right, so let's hear what he has to say between the bull and the bear.
No liquidity to buy anything, and so the market was having a really hard time. And now people are buying things back. And now you're looking at your statement and you've got big numbers. You got the S&P up 8%. We've got the long bond, the treasuries up 9%. You know, we've got emerging market equity up 11%. So unfortunately, I think that we've gotten a lot of return already for the first part of this year. And as we move forward a couple of months, I think we're going to start getting overvalued because I think this inflation narrative that is so supportive of markets. We're almost, I mean, I almost thought that Jay Powell was going to use the word Goldilocks at one point. He seemed so comfortable with where he was. Weird how he, at the same time, had this aura of relaxation, and yet he did still talk tough. Jobs not done, jobs not done. We have to raise rates more. We're not going to stop. We can't stop too early. But for some reason, the mood sort of trumped, and that rhetoric just didn't seem to have the teeth or the intensity that he had last fall. And I think the market was relieved to see that.
So you hear for yourself, right? It's pretty clear he didn't have the what tenacity to actually deliver. Okay, the thing that was something that was actually missing In fact, okay, let me just skip this, okay, just not to go far away. All right, so the thing is, we all know that Jerome Powell really, he did a very decent job during the journalist meeting, and of course, even though he kept reiterating this, but it seems that the outside force is just pushing the market all the way up. So it's either that the market is challenging Jerome Powell, that you can do what you want, I'm still going to push up the market, or Jerome Powell himself is pushing the market to basically calm the market while he still continue to do his thing. So it can be anything. So all my point is just understand this is not going to be easy. So short selling legend Jim Cramer hinted that at the risk of the bear market, unlike anything he experienced since starting on street in 1980. So he is saying that, right, the market now, this bear market is going to really be big, okay? And of course, another guy, which is the Black Swan fund manager, all right, he's saying that, right, it's headed for a tinderbox time bomb, all right? Wow, it can be worse than 1929 crash. Okay, and of course, this Mike Wilson just came out on Bloomberg. He just said that, right, the market could actually stop buying from yesterday. So what happened now, guys? Are these bears wrong? Or they are being cooked by the bulls, or basically itself they are warning and giving you information, but just that the rain hasn't started coming in, right? Who knows, correct? So all this is up to you guys to make your final decision. To me itself, it's pretty clear that rate hike means rate hike. That means cost will still be there, it will continue, and earnings has been clearly seen that it's going down. But the market want to focus on revenue, then what can I say, right? This is all market decision. It's never about the accounting that big stocks goes up. It's always the price action. So let's look at the chart right now to make our life easier, shall we? Okay, all right, so the thing is this, for the Dow Jones right now, you can see that, wow, what an amazing doji bar right here. So the market came down to the target I mentioned, 33,749 last night, and then it rebounded. Now we can understand this, guys. Do you know that the Dow Jones have been basically bouncing around this area for quite a while? In fact itself, right, imagine this area here, and this area here has been a very comforting bouncing area. In fact, yesterday, look at it, it just touches here brilliantly and pull back, and then when it came back down, recovered. So this is like how many points? Let's take a look. This is like a 1,300 points, ding dong. All right, so what do we expect? Well, usually it's like this. If the market is doing that sort of consolidation, it's just a matter of time, something happen big and the market will move. But I still want to tell you this, guys, my KFC level shows that the market is above it, right? It's still bullish unless the market goes below this particular level. If not, the market buying, it will still be there. Now for the Nasdaq, oh my god, it flushes up all the way, covering all the short covering and stuff like that. Now the thing is this, Nasdaq KFC level was here, and the last time we saw this, that was a very strong indication that the Nasdaq will go higher, which of course in hindsight it really happened. So all these things tells me that, like, my KFC level is quite pretty interesting. Yep. Okay, so this is the Nasdaq and the Dow Jones. Let's just look now on the gold market. Now gold market, look at it, how brilliant is my KFC level. Yesterday, gold came down all the way, but my KFC level was there at 1921. So once the market touches it, incredibly, it stopped there, reversed course, and went all the way up, and now it's 1950. So don't you think that if I just keep on buying at this level every single day, gosh, that's good money, right? Exactly. That's the reason why I say that our system is going to be a mind-blowing one. Okay, guys, you really need to stay very close with us, okay, on this. And of course, for Hang Seng, well, we have a very strong push up recently. Then, of course, the profit were all taken away. This morning, it gap up. So let's see how much can it stay. 21,950 is the first support area. Okay, so now let's look at the with the TWB system, right, to make it easier and clearer for everybody. Let me just refresh my chart. Okay, so now we have a very strong DJDD, because why? Look at the DJ. The doji is ridiculously powerful, okay? A big one. Okay, so the thing is this. The KSI is red. The KRW is also red. So that means that the selling pressure is there. So that's why you have a very strong selling as of last night. But as you can see, very sure the market just pump up all the way. So who came in? It's the last 2 hours pump up. So it's done by definitely not the retailers, not the normal. It's done by some big forces. So today is critical. If the market stays below OP, it will likely be coming down to 33,832. I'm going to be upfront because it's DJDD, directional day. But if the market goes above OP and it breaks above 34,100, it will go all the way up to 34,295. Okay, so upside is 295, downside itself is 832. So traders, you need to take note of that. The Nasdaq. Now the Nasdaq has continued to rally. Today is let's take a look. The market now is trading between the two pivots. So as long as the Nasdaq stays above 12365, the upside is still going to be there at 12776. Okay. Now S&P 500, you can see pretty clear that's a new BNB form, right? So the market has broke above the BNB RL and it's likely going to touch 4161. Now you ask me, most likely the market could touch here, right? If the follow through buying continue today, 4161 will be a very good level, take some profit. And of course, if you think you don't mind shorting the market, then you can consider doing somewhere around here. Okay. All right, now do note the market today pivot 2 is 4109. So I mean, if the market take the reverse course instead, usually after FOMC meeting and after increased rate hike, after the rate hike increase, sorry, my bad. So usually there will be a profit taking. Okay, so let's just see whether this will happen. 4109 will be the first support. Okay. All right, let's look at the Nikkei right now. With some time for Nikkei. Now Nikkei is also a doji. It's a new BNB. So now it's trading below opening price. So some selling. KSI is green. Boys are buying. But the KRW turned red. So what I suspect is that there's some profit taking already happening because the market have been consolidating for quite a couple of days, right? So now things is settled down. Watch this. 27,315 is actually the pivot 1 level. And if you look at the chart, this is very amazing. The market really came down, touch and rebound. Wow, amazing to have a technical level so accurate. And in fact, pivot 1 and KTR -2 is a stack. So that's the reason why the market found strength right here. So let's see how, if the market can stay strong, as long as stable 27,315, it should be going back to 27,400 again. Okay. All right. So I really love my indicator. It's really impressive. Okay. All right. So how about Hang Seng? Now Hang Seng, well, it's very interesting. Hang Seng actually is a buy because why? The KSI and the KRW both come the same direction. So by default, it should be a up buy day today. So yes, indeed, the market gap up, but look at it. It's kind of resisted by the BNB extension of 22,240. Now, of course, we don't use it as a form like target, like resistance, but it's just a number to take note. If the market do pull back later on, 22,000 will be the base, okay, because that's the MLP level. But the upside can go all the way to 22,818. It is possible, but of course, there must be some reason to push it up. Both KSI and TWB are both in the positive side. That's why the market have a green arrow there. Okay, so take note of that. Okay, so we have all this covered. Let's look at crude oil right now. Now, crude oil yesterday plunged. Oh, that's good. Crude oil plunged all the way down yesterday to $75.89. And it's a new BNB with a new red arrow because the KSI and the KRW are both in the same direction. So watch out for this, guys. This is a new BNB. So the resistance is at 79.60. The support is at 75.83, and if crude oil can come down to 72.20, that will be the best of the best of the best. But of course, if that happens, that means that the economy may not be doing well because there's no demand for this energy, right? Okay. Now let's look at some of the forex. Now yesterday the dollar actually came off. In fact, the dollar was down. Let me bring the dollar chart for you. Quick one, yeah. The dollar chart. You can see the dollar itself came down, broke below 102. So I was wrong, but I tell you guys. About this, you can consider looking to buy whenever there's a chance. So the number that I mentioned was here, which is about 10150, but the market went below it and now it's trading at 100.90. Wow, that's very low. Well, based on the technical, well, it can still go down if you really see from this angle. You can go down to all the way to 140, okay, 100.40. If it goes there, I think that should be a very strong base because the RSI shows that it's a matter of time. We could see a rebound pretty soon on the dollar. Okay, so the dollar yen right now is coming down and it has just touched the pivot 2 at 128.20. Okay, it just touched it and have rebounded. If you look at the 15-minute chart, you can see a very clear sign of what happened. The price basically sell down, touches pivot 2, couldn't go down, recovered once again. So again, all these numbers are all automatically, you don't need to draw at all. So what we have right now is the KSI and KW are both very red. So most likely we're going to see a bit more selling to 127.84. Okay, but just I think it'll be a touch and go. Yeah. So guys, if you want to buy dollar yen, watch out for 127.84. Buy, and it should rebound after that. So look out for that. Yeah? Okay, then we have Powell. Well, Powell is moving up, but it's kind of resisted the new BNB. And of course, if the dollar recover, Powell will likely take into consideration of taking profit. So to me, for Powell right now, right, anything about 124 will be a good time to take some profit, okay? Or you can put a sell position. I don't think that the Powell the UK economy can be any better, right? So that's why I say that you can take some profit around here. And last one is Euro. Let's take a look. Euro has pushed up to 1.10. Yep, it really happened. Yesterday was a very strong pull up. I thought the Euro will come down, but when I tell you guys, if the market is supported, usually it's a strength. So with the market having strength here itself, it has pushed up to 110. All right. So for those who listened to my MEO yesterday, I did say it's time to buy Euro. You are actually in good profit right now. Okay. All right. So we have the currency done. Let's look at the gold and the gold market. Let's give me a moment. Okay. Here we go for gold. Now gold, as you can see, the market is now staying above the BNB RL, which is 1949, but it's strongly resisted at the KCB at 1956. Okay, strong resistance. So let's pull back a little bit. If the market loses this number 1949, then it may pull back down to 1939. Now think about this. The interest rate has been high. So by right, the dollar should go up, but instead the dollar came off, and that gave the strength on the gold market. So if the dollar do a technical rebound, then gold price will likely be coming down. So traders, you need to remember that, yeah. Now for silver, it's incredible. Look, two long tails bump up all the way, and now it's trading a bit above the BNB RL level of $24.10. So if the market can continue and breaks 24.30, we may even see all the way up to 25.17. All right. So for me, I would really want to buy some silver at $22. I've been waiting for this for some time, but it's still not happening. Wait further, yeah. All right, then we have the next two, which is the Bitcoin and the Ethereum. Well, Bitcoin yesterday went up, all right, up to 23,700, and this morning follow through buying because it broke above the RL level, so that's why we saw 24,000. But as I mentioned to you, 24,000 is a strong level of resistance, and then I don't think that you need to want to buy it right now. Maybe if you want to buy for long term, it's fine, but for the near term, I think let it come back a little bit more, then you buy. It makes more sense, yeah. And last but not least is Ethereum. Ethereum is very clear. It has pumped up above the BNB RL level, so 1720 should be coming in, but KSI is not showing good sign at all. So I think that 1720 is better to book and go out and don't stay on, right? Guys, thank you very much for today's watching, hearing me, and I really hope that you guys get some good idea from here. Please leave a comment, and I'll see you again. This is Cal signing off. Bye bye.